machinery, agriculture, manufacturing and technology. You name it, this East Asian country has it. China is most commonly known for its genius products that have been exported all around the world. I'm quite sure that your household has one or two Chinese merchandise. But this isn't the only redeeming feature of this country. For the past 2 decades, China has been rapidly growing to become an economic capital that no one has ever been able to keep up with. However, this development can be likened to another Asian country's economic disaster in the early 1990s, which displayed similarity to that of a very fragile eggshell that may break over time. This video will show you how the world will cope from China's large housing boom to its expected downfall for the next years to come. Of course, please don't forget to hit the like and subscribe button before we continue. China's population has been gradually increasing for the past few years that its citizens were keeping up with it through purchasing houses all over the country, which had ultimately led to its growth and economy. Real estate property developers even resorted to borrowing money in order to widen their portfolio, as many Chinese citizens were looking for residential homes to move into, and as their population grew, so did the prices of these buildings. Purchasing a house in the far-flung areas was the better option for the people, since they could no longer afford those being sold in the city. This has become the norm, and once you'd visit the country's capital or any big cities, you'd notice something strange. Ghost cities are what they're commonly known as. Modern buildings in mint condition, unattended. They're all around because the sole reason for their existence is the belief that these prices will continue to increase in proportion to that of the country's population and economic growth. However, contrary to expectations, there has not been a rise in the purchases of these centrally located buildings. In fact, the country's most famous ghost town, Ordo's new town, expected an increase in its population, but got disappointed instead as the people continued to move out of the city, rendering the population to become only 100,000 in the year 2016. They were only able to gradually fill the empty spaces by placing top schools into the city. After 2 decades of growth, the Chinese real estate sector is now worth over $50 trillion, twice that of the US and 4 times more of the country's entire GDP, albeit the fact that those empty cities could have definitely housed that of a small country, such as Italy. According to an investment management firm, Loomis Sales, it's estimated that 70% of China's entire wealth is in real estate. Thus, it's not surprising that the country's citizens would invest more in obtaining houses than any other else. There's an amplification of desire to purchase due to the fear of missing out, leading to bigger and bigger loans as time goes by. And as every action has a potential reaction, China's real estate growth bubble is already showing signs of gradual decrease because a certain Chinese housing market continued increasing its prices. Blind by the rise of estate demand, making the citizens unable to cope with means to buy, which led many developers to be swallowed more in debt than in profit. And on top of all these housing developers, Evergrande has the center seat as it's one of the largest real estate developers in the world, with the use of corporate bonds issued to investors all around the globe. The company expanded its real estate portfolio to a booming 565 million square meters of development, which was only made possible because Evergrande borrowed $300 billion as capital. It flourished in 2018 as it became the most valuable real estate company in the entire world. But it was only short-lived, as investors realized that the company was stuck in a major predicament. Various credit agencies had to classify it in default after Evergrande failed to pay off a $260 million interest due. There have been talks of suing the company as it still struggles to repay its debts. A major contributor to this company's gradual downfall is due to the fact that the Chinese leader, President Xi Jinping, has been destabilizing the real estate sector by reducing the country's dependency on the property sector. For it is in his values that houses are meant to be homes for the citizen, and to be stayed upon that they should not be abused for business. This action of the president may very well be a threat to China's economic development. Evergrande may be a huge company, but it's still only a part of the numerous developers across the country and all around the globe which placed its bets on China. Real estate developers have recently been dropping out of the market. An example of this is the Chinese developer Shimao, which shirked its $101 million interest, and another one would be the Oceanwide Holdings, which defaulted in a $175 million loan. The latest investigation revealed that over 484 companies were overdue in the fourth quarter of 2021. And this was only just the beginning. It's now becoming clear that Chinese real estate is not where those looking for money ought to be. And this is a known fact to property developers, as the estimated top 100 real estate development companies are now only down to 35% last December 2021. That was the first ever decrease in sales of the said field for the past 20 years, according to Cathie, the CEO of ARK Invest, an investment management firm. Amidst all of the recent happening in the country, the greatest drama occurred in Greater China, in which Evergrande suspends stock exchange trading and was asked to demolish 39 illegal buildings, as they did not have the permit. The central bank backed out of their words to increase the liquidity, and although a Chinese regulator vowed stability of the market, they haven't done anything. The country's currency, yuan, held up with the help of the government. It's now starting to weaken though, and one stock, Huarong, which had not been traded since last March, opened just this week but abruptly dropped to 50%. The country's creeping problem has reached the ears of the Federal Reserve, as it noted that China's real estate decline may lead to a negative effect on the US economy, and the strain to their financial system may act on the United States. To support this claim, Fed cited that the Chinese government and its debts must be given appropriate attention. Various economists assume that the East Asian country's fast-growing GDP is a mark of the rise of economic development, but this can only be seen as a farce since a markedly huge portion of that growth is humongous debts not only in real estate but also in China's entire economy. The Chinese household has an inversely proportional relationship with the country's debt because as the GDP increases, so does the balance that China has left unpaid. The debts have become so severe that it's become in line with that of fully developed countries. An overextension of these undue obligations will definitely have negative consequences. The Fed also pointed out another issue, which was the three red lines policy of the Chinese government, in complement to the Chinese Communist Party, which serves as outline thresholds for the level of borrowing that the real estate developers can take out. Firstly, a liability to asset ratio under 70%, a net debt to equity ratio less than 100, and a cash to short-term debt ratio of 1. Those that are able to meet these requirements will be able to increase their debt level by 5% per year for each red line that they comply with. It was a reasonable policy, but China should have implemented it years before, as according to Cathie, the CPP's action could backfire any moment as the developers are overextending their rights, making it difficult to control. Over two-thirds of Chinese developers have crossed at least one red line, and because developers can just lower their liabilities in a snap, major companies such as Evergrande and Cathie Group Holdings aim to sell their properties as early as possible. Evergrande is selling their tower, which is the heart of Hong Kong headquarters. On the other hand, Cathie Group Holdings placed 4.7 million square feet along with 18 of its projects up for sale. And just like that of Evergrande, still isn't sold yet, as these two are not the only ones frantically selling off their properties with no buyers at all. The only possible solution to this problem is to continue to lower the selling prices, which may then eventually lead to the collapse of the market. Before we proceed, have you ever thought of living in another country? With its vast history, historically acclaimed structures, rich culture, and accommodating citizens, it's truly a gem. If you're planning to migrate to China, now would be the perfect time to think about it. Asia is truly a continent to behold. And now let's continue. Actually, Evergrande already has plans to offer a 30% discount to increase their sales. However, this was not deemed enough as buyers continue to be small in numbers, which simply wasn't enough for the company to pay off its staggering loan interests. Economists are only left to wonder how the country would be able to come up with a solution, as the property development of the country represents 29% of China's economic output. What would happen if the sector would collapse? Not only will it affect its citizens, but also it will spill over to countries across the globe. The country's economic slowdown may become an asset to the deterioration of financial markets. In short, with the crash of the Chinese real estate market, the whole global economy would suffer as it heavily relies on China for its manufacturing quality and products, ranging from gadgets, cars, and any day-to-day machinery. Some might think that China is much of a powerhouse to fail, but this predicament also happened back in the early 1980s with Japan's real estate crash. Just like what is happening to China now, Japan was the golden model for growing economies back then. It was even thought of that this growing Asian country could exceed the US as the largest economic powerhouse. Developers would have immense loans because their Ministry of Finance positively encouraged corporates to borrowing and promoting low interest rates. Deregulation and domestic stimulation then resulted to an increase in their money supply by around 8 to 10% per year. Japan's GDP climbed higher and higher, and it was astonishing for everyone to witness, but just as it rose quickly to the ladders of success, it also came abruptly to an end. By 1992, their stock market was slashed to almost 60%. Aside from the 60% fall, the Nikkei index decreased by an additional 45%, and this crash was infamously known as the lost decades, since the prices did not recover for decades. Cathie believes that China is in a very similar situation to that of Japan in the past. With the continued rise of real estate prices, the growing debt crisis of the country also increases. However, what's baffling is that even though there's evidence of a decrease in the real estate market, consumer confidence is still high, which was unexpected. Consumer savings is up by 75%, and this is the reason why the Chinese economy is still afloat even with all of the problems they're currently in, as pork and rice prices are down. Food prices in the country were down by a couple of percentages, making consumers happy and satisfied. But this is not enough to pull the country from this, because it's expected that within the next 3 to 6 months, the likely repercussion will most likely be on the international price exchanges. A few products are already dropping: red iron, lumber, and oil. Although the CPP has acknowledged the growing problem and has come up with a solution by cutting out interest rates to boost the country's economy, it's opposed by the Fed in contradiction to increasing the proposal of raising rates as soon as possible. As China continues to find ways on how to remedy this turmoil that they're in, it's expected that a 10% decline in residential sales nationwide is going to make ripples around international waters and eventually affect you. If you had fun and learned a lot through this video, hit like and subscribe to be updated on news and events around the globe at the comfort of your own homes with just a single tap on your device. See you then.